Thank you, Zach, and thanks everybody for coming to this session. So this is all about investing in NeuroGaming. My name is Dean Takahashi. I'm the lead writer for GamesBeat at VentureBeat, and we have our own game conference that comes up September 15th and 16th this year, GamesBeat 2014. That's going to be here in San Francisco. So if you're curious about that, I can hand you a card about that. And I'll introduce our session here and our panelists. On my left here is Tim Chang. He's the managing director for the Mayfield Fund. Next to him is Sana Choudary, CEO of Yetizen, and Roger Kwai. He's general partner of Technology Partners, and Sunny Dhillon, partner at Signia Venture Partners. And so why don't we just go down the line and tell us more about yourself. Here.
Good afternoon. I'm Tim Chang with Mayfield Fund. We're an early stage focused venture capital firm here in Silicon Valley, focusing on technology companies. My interest in this area probably came out of when I co-led the Series A investment in a company called Lumosity, which is arguably one of the best financially performing companies in brain training space globally.
That a nice big exhibit out there too.
Yes, they are here. Go visit them. Cool new offices above Yelp as well. But to me, they've proven the power of freemium subscription models and how large those can scale. That took me down a path of investing in the quantified self and body and brain hacking realms, which I'm an active practitioner. Maybe we can chat about that later.
Sana?
So I'm the CEO of Yetizen, which is a games accelerator and a games community hub. We actually have about 2 portfolio companies that have been in this neurogaming space. One is a company called Kitaro that actually uses gesture, movement, and engages that in your game that you're playing on your iPhone, right? There's a couple of other things along those lines that I'll talk more about as the panel progresses. And in terms of emerging categories around neurogaming, I think there's a lot of interesting things going on right now.
Good afternoon. I'm Roger Kwai. I run the health care practice at Technology Partners. We're a VC firm that does early stage as well as some later stage investments and I specialize in neurotechnology, both biotech, medtech, and healthcare IT. My interest in this space began way back when I did my PhD in neurofeedback, and then I developed the first mobile EEG system that became the Oxford Medalog, and it's been used for about 20 years for monitoring patients. And we've made some investments in this space and continue to look at this space. I think it's very exciting going forward.
Hi guys, Sunny Dhillon from Signia Venture Partners. We're an early stage fund focused on seed and Series A investments. We're pretty active in the game space. We have about a dozen gaming investments right now across a couple of funds, in a previous fund of partner capital and the current fund we currently have. What I'm really excited about is I got exposed to NeuroGaming first when I was looking at education technology, various forms of mobile games that were used to help special needs children with reading and basic social skills. Since then, pretty excited about virtual reality and seeing what, augmented reality and virtual reality and seeing what opportunities present themselves there for our portfolio and for emerging investments that we're looking at.
So we've heard from a lot of sort of dreamers and academics for a lot of the day so far, and these folks, I think they sort of get more cred or respect, maybe the more skeptical they are of hype, and how good at they are at sort of detecting reality, I guess. So just sort of to help set sort of the reality of where this industry is now. Maybe would you talk first about, like what is the sector that's actually drawing most of your money right now, regardless of whether it's neurogaming or not, or even gaming? But like, is your firm as a firm most excited about something else?
You want me to start?
Yeah, sure.
So I would bucket neurogaming as something that's still ill-defined. So one question we should probably chat about at some point is just what is neurogaming? Mm-hmm. But the overall bucket that we've been spending a lot of time in is really let's call it self-development technologies. So these are things that improve your life, your aspirational life. It started from quantified self and in more fitness and health, but now it's emerging towards all things: nutrition, mindfulness, meditation, relationship skills, all these sort of things. And still looking for a term to call this space, but I guess my overall thesis is, can you use technology to make yourself a better human being? Sort of the tech-enabled soul, if you will. And that's something I'm most excited about. All these sensors, all these technologies provide feedback channels and can prove empirically how things like meditation or all those things actually work without sort of the prior, kind of taboo of being sort of hippie-like or spiritual or religious or things like that.
Sana? Or, yeah.
As an active meditator, I'm really excited to see what you invest in there, Tim. So I actually think of the NeuroGaming space as three sort of subcategories, right? There's wearables and quantified self, which is a little bit of what Tim talked about. That as an emerging category is pretty far advanced. There's certain traction, certain companies that have done well, right? The second category, I believe, is augmented reality software solutions. So anything that basically gives us a new way of interacting with reality as is. And the third bucket to me is basically anything that uses recognition, but not for security purposes, right? So there's a lot of stuff that's been around forever and ever on facial, touch recognition, et cetera, for security. That to me is not really NeuroGaming. When it uses things to actually provide some other type of like engagement, like there's a 3D motion capture game called Pandemania that I'm sure a lot of you guys saw last year at CES. That's within this category of like, facial recognition. I believe the company that did it has a booth outside today. And then also, like a fourth category is sensors and hardware. This is where NeuroSky would fit in, Oculus Rift, arguably in some ways. And then the last one is gesture and movement control interaction with content. And this is where our company, Kitaro, which I mentioned allows you to actually use your head movements to play a game, as well as another company of ours, which is called Flaming Labs, where you can use an Oculus Rift to create an adventure experience for anyone who's basically going into a mall paying for, like, rides. So imagine your, what was it, King's Dominion days, but in a mall and with Oculus Rift, right? So that's basically building on top of an existing software, existing platform, and allowing some kind of sort of content interaction that has gesture and movement allowed. Another one that I haven't had the privilege of seeing a demo of yet, but I think sounds very interesting, I don't know if they're here today, is a company called Leaf Notes, which allows you to draw and through drawing and gestures and movement actually create new pieces of music. So that's very interesting as well.
We spent most of our time and attention on neurostimulation, which fits in the traditional medical device space. We have one company just got FDA approval. Actually, two of them just got FDA approval, and one has just launched. My personal interest is also in the effective computing space. It's interesting to see we have some panels on emotion, and I think as we think about neurotechnology, it's good not just to think about the central nervous system, but also about peripheral nervous system, which of course is haptic sensing, etc., and the autonomic nervous system, which gets us into a whole area of monitoring emotion and effective computing. I think it's nascent yet, and we have made no investments, but that's a space I think is one to watch. And the whole mobile health space is very interesting. We're yet to see a clear winner, but I think that area is starting to take off, and it can encompass many different aspects of the technology, both gaming and also more traditional diagnostics and therapeutics.
So gaming is a space that the fund looks at pretty intently, and personally, I'm really interested in, being a gamer myself. I think that in terms of trends for the future, we are looking a lot more at core gaming on mobile these days. I think that we've seen, gamers out there that are pretty tired with the glut of casual games that you're seeing out there. How many more Match 3 Candy Crushes can we deal with? I think that we're going to start seeing a much more hardcore game mechanics, but in a more accessible format by the nature of the device that they're on, and also by gameplay sessions and game design actually being optimized for that device as well. So slightly shorter gameplay sessions, something that's tailored towards you jumping in and out, similar to the way that you do with casual, but obviously you're going to be you're more engaged by a more compelling storyline, character development, different tack on monetization, things like that. With regards to touching upon some of the points that my fellow panelists have mentioned, Gamification, while traditionally has been a fairly dirty word because it's been used so poorly in the past, with badges and things like that, I think that true gamification within health and fitness and how it interacts with a whole slew of other wearable devices is very interesting. So we actually have a portfolio company named Curbo Health that is focused on reducing childhood obesity through gamification on a mobile app. A lot of it is catered on child psychology developed at Stanford regarding how mnemonically get kids to internalize good, healthy eating habits. So I would consider that to be a form of neurogaming. Just to bring it back to the panel.
Sana, you actually had some numbers that you looked at. Can you tell the crowd about those for the different, say, categories or within the definition of neurogaming, what's been invested, I guess?
Sure. So using my sort of 5 categories of what neurogaming includes, in 2013 there's about 12 investments, and of those 8 had disclosed investment amounts. So approximately 84 million went into all these companies. Obviously, as you can tell by the number, that does not include Oculus Rift. Not sure why that didn't show up in the data pool. Maybe the financing was actually earlier than publicly disclosed.
And they got 75 million bucks last year, right?
Yep. And that is actually in one of the categories of the 5. If you remember, that was the one that essentially is more in the hardware platform. That if it works and it does great things, which it does, people will be building more content plays on top of that. And I think majority of the investments that I looked at were sort of creating content plays on existing devices.
And then once again, if you count Oculus, then you already have a $2 billion exit in neurogaming, right? And usually you just sort of would not expect that for quite a long time. So Oculus had a very accelerated life, right?
Yep.
Sunny,
One quick thing about those numbers, these numbers were all sort of investment. It was not first venture financing. So if you were an early stage company in any of those 5 categories, look at what traction all the other companies that did get investment had. It may not mean that, if you're early stage, you have a great idea and maybe a great demo, it's going to be easy to raise financing. So what applies to you depends very much on the specific subcategory. So do some research, do some homework, who the investors are, what they've been looking for in terms of traction. It's going to be very, very different depending on which subcategory you're at.
An interesting thing that I noticed was it was pretty rampant and pretty quick, ramp up I should say, of dollars flowing in to the VR gaming space as soon as the Oculus acquisition was announced. Every other VR gaming company that I had on my deal board suddenly took a little longer to reply to emails. Suddenly was the pretty girl at the prom. So I think that there's a couple out there that we're going to start to see that they've got a lot of great Facebook paper now to be able to make acquisitions on their own. So there was a couple that I actually met at the last GamesBeat that I was tracking. Survios was one. If anyone's familiar with that, you stand in this pretty big plate and it's all immersive, like 360 kind of immersive interaction with the game that you're playing. So when you're running, you're really basically running. It was a pretty cool demo. Companies like that, like Melon, the headband, which measures your emotive state based on your brain waves. Even Mio armbands and things like that. You're going to start to see a lot more money continue to flow into gesture-based, voice-recognized, all the different forms of interactive gaming that we touched upon previously. Consolidation is going to start to happen.
So how much, I guess one of the points of some of the questions is really to show that that this is at its beginning, and that if you look at the financials right now, it may not make sense, I guess. For the dreamers and for the academics out there, it makes a ton of sense to do what they're doing, right? But for you guys to sort of dive in and follow right in behind them right now, is a bit of a risk, right? How do you sort of feel about whether you believe in this space enough to throw some money into it, or that you might say be better off waiting for a bit for better investments to come along?
We've talked about exits, and you've got a interesting outlier like an Oculus at a $2 billion. Keep in mind that's pre-shipment, pre-revenue of a company. So what I really look for is when is the first data point of a $100 million recurring sustainable revenue company, because that proves a standalone company in the space. I would guess from a revenue standpoint, this entire space, all categories together, probably less than $200-300 million total revenue, and a huge chunk of that is Lumosity. And so, we don't exactly have a whole lot of, proven cases there. But I think with companies like Lumosity and others at scale, you start to get business validation that there are revenue levels that can create standalone businesses.
I would guess they're making a lot of money because I see their ads everywhere. How much money are they making?
I won't say, but I'll just say if you can afford multi-million-dollar TV ads and a profitable acquisition of customers on unit economics, that's a pretty good sign. That's why my favorite business model in this whole space is not selling hardware, not selling in-app purchases, actually subscriptions, which I think befits the nature of what a lot of this is, which is really self-improvement, personal coaching, personal development types of services. And if there's any one value prop that's worth shelling out money for on a recurring basis, it's making your brain a better brain.
So dive in or hesitate? Anybody else?
I'm jumping in.
They don't want to go first.
One of the questions we have to look at is what's the value proposition for the customer? And a lot of startup companies, and we have, as an investor, I want to look at what the company offers that's more than just technology. I think sometimes we have a solution looking for a problem, and we have to look from the market point of view, what's sustainable? It may be cool to try and move things around with your mind right now, but what happens when the novelty of that is worn off? Is this more than a gimmick? Is it sustainable? Where can we scale companies? So we have to look at the aspect of the market risk as well as the technology risk. And of course, for a VC, the other legs of the stool are the management. Can they really execute the plan? And the biggest one of all is financing risks. We made 2 investments in this space, and both of them went down. The reasons were financing risks. We had an enormous amount of working capital raised to scale the companies. And we had $10 million in one company, and we couldn't find anybody else to come in alongside us, so that one went toes up. And we did another one that was in the retail space that had Best Buy and J&J and as investors alongside us, and they too ran out of working capital to expand. So one of the dangers is for startup companies, it's fairly easy to get angel money or Kickstarter money, but the real challenge is when you try to get institutional capital and then the working capital to scale companies. So we look at the whole picture, the 4 types of risks before we make our jump into a deal.
So one sign of momentum in a space is if you can find people to co-invest with you that also believe in it.
Yeah, let me just comment on that. Unfortunately, this space falls between the cracks of traditional healthcare investing and traditional IT investing, and there's not too many healthcare investors get comfortable talking about gamification, and a lot of IT guys get a little squidgy when you start talking about EEG and other physiological signals. So it is a challenge just to find the fairly small group of investors that actually are prepared to invest in this conjunction of the two spaces.
Somebody else want? Okay.
So in general, my, games, there's been a lot more consolidation, later stage investment going into game companies. The period of time from inception to first financing in general has been getting larger and larger and larger, right? So my sense is usually can a company actually survive on its own revenues? Or does it actually have enough runway with its existing sort of, money it's raised through angels or something else to be able to get to a point of critical traction where that can see some revenues, right? And if those 2 things are answered, I will basically be, wanting to come into the space and sort of invest and whatnot, right? And that's the part that I think a lot of startups aren't thinking about. It's more of, let me get some kind of demo out there that proves the idea, and I'm going to go and raise money, and maybe Tim Chang will write me a check, maybe Sunny will, whoever, right? And typically, if you look at these guys as investments also, they come in after a little bit more traction than just that demo.
You're an accelerator, so you can maybe explain to the crowd, I guess. You could invest in a company with 1 to 5 people, right? I mean, that's not an unusual thing for you guys to do.
Yeah, so basically we still take companies that are at that phase where when they're raising to scale, not raising for survival, right? So even as an accelerator, we're somewhat later stage than what most people may think accelerators and incubators do.
Sunny?
Yeah, so we hear this all the time in early stage investments. It really is the quality of the team when you start to see teams that have maybe been venture-backed previously, they know what to do, they know how to scale a business. Maybe they've, with regards to a particular business model, they've experienced it with another content-related or interactive entertainment kind of startup previously. But even if you're a first-time entrepreneur, complementary fit between team members, is it just a bunch of PhDs that are, studying haptic sensing? That's what we're talking about. Yeah, so stuff around, neurology, et cetera, or are these guys, there's a strong CEO candidate blended with an equally strong CTO, and then there you have maybe like a guy who's got a good experience in product and UI and UX as well. So I think finding those types of teams, sure, like why not? We're happy to jump in head first. Gaming specifically, just echoing or building upon what these guys have just said, it gets hot and cold, right? So as we all know, after Zynga's IPO, you couldn't raise a venture dollar for a gaming company to save your life. It was impossible. We started to cool off from there now, and King.com's IPO, post-IPO share price drop has not really, it hasn't really seemed to hurt things too much. Are we in a bubble right now when it comes to seed stage valuations? Yes, that's largely because there's some very, very large funds out there that investment criteria are a little looser sometimes when it comes to writing 100K checks out of a $1 billion, $2 billion seed fund. But it really comes to when you get to the Series A, which is a stage that we play at as well, where what have you done with that money? How well have you spent it? And how well have you set yourself up to be set for a reasonable valuation in the follow-on? These are the kind of things that we would think about.
And I guess one other thing is what have you learned in that period of experimentation from getting to whatever phase you're in? What have you learned about the space? Why do you think you're going to actually make it better than anyone else who's actually going after the same stuff? That it may sound very generic, but on a company by company level, looking at the types of problems they're trying to solve, there's certain things that you realize, this person's really thought about the problem deeply, and they have a plan for how to go from here to sort of that next stage of being a much, much larger company.
Well, what is some advice for the startups in the audience? And Tim, maybe could you spell out some of the things Lumosity did right in order to sort of get where they are?
One of the things that was a surprise on Lumosity is when they first launched, the games catalog is really thin. And speaking as a former board member, they weren't the highest quality games. And so people used to laugh and say, these are really crappy games and you can't prove efficacy, but big learning wasn't about games. It wasn't about fun. It was about the promise that you could be better in terms of your mental performance, whatever that meant to you. And we used to push this thing called the BPI, the Brain Performance Index, but people didn't really care about that as much because some days it might go up, some days it might go down. It was actually more about this empowerment that you felt when you purchased such services for yourself, very much like when you join a gym. And then for services that people believe are good for them, they don't churn out because it's like admitting defeat. You feel like a chump if you quit your gym membership, right? Despite the fact that you actually don't use it. And so a huge part of this aspirational service is that if people believe it's good for them, it probably will be, and they will ascribe their own narrative towards why it helps. We have customer testimonials swearing that it made them a better magician or it helped them write their term paper or whatever it is. And the point is that was far more powerful than even white paper studies from Johns Hopkins or BPI or something like that. So I think you'll see that in the neuro area is that there's a lot of this power of hope, optimism, and aspiration that customers will buy into. I'm not saying sell them snake oil. I'm saying that you don't have to only focus on the efficacy argument that has been the rat hole that the health tech and medical devices industry always has to go down before they sell products.
Roger, how do you look at some of that?
Well, I'll just focus on the comment you made about the health and wellness market. I think that's very promising. In fact, yesterday in the Wall Street Journal, some of you may have read the article about the use of games for treating depression. And there are significant results have been achieved. And it's encouraging to see companies like Posit doing a formal FDA trial for treatment of schizophrenia. So I feel that is indeed the wave of the future. And if we look at many of the problems with drugs, with side effects, we realize there is a need for an alternative. And I think NeuroGaming and other forms of neurotechnology definitely do have lots of future in the areas of health and wellness. A couple of comments. One, I think, is many gamers will be surprised, very surprised, just how much time and money it takes to get a new product through the FDA, even a non-significant product. And that's going to be a shock for many people who try to get in the therapeutic space. I believe also in the wellness space, we really need to demonstrate some form of efficacy, but there, if we're not trying to claim a therapeutic effect, we can actually use placebo effect to an advantage. as long as people feel good about themselves, they continue to use the product. So we don't necessarily have to go down the FDA regulatory route. We see now in many areas like ADD, that's been around for a long time with the use of feedback training. It's managed to fly under the FDA radar so far, and a lot of the studies are anecdotal, and many of the results sound fine, but not many randomized control studies have been done. But nevertheless, many parents and many children feel very happy about use of that technology. And I think that's actually something we have to think carefully about when we develop a product. Is it going to be a therapeutic, which means an FDA regulated product, or is it going to be a wellness product? One space I'm excited about is the sleep area. We have a sleep company. I made an investment in a sleep company that used EEG. Unfortunately, that one didn't make it. I have another company in the sleep space, and we're struggling with this right now. Do we become a therapeutic with claims for insomnia, or do we become a wellness product with claims for sleep aids? There's a very subtle distinction there that makes a difference of about $5 to $6 million of FDA trials.
So Nintendo reported an annual loss last night of $229 million, and you could attribute that to the failure of the Wii U. But the only there was no apology from the CEO there. The only explanation he gave was that we're basically pivoting into games that deliver quality of life or entertainment that improves the health of people. So you could sort of argue that Nintendo as a company is pivoting away from games into neuro games in a very big way. So you guys have any sort of observation about that?
I think that I'd just like to see Nintendo do what it does best now. I think they had they hit gold with the Wii when it first came out with motion sensing technology. I just want to start seeing some of the great IP that they have really truly go cross-platform, or a mobile version of Mario. Like, why haven't we seen that? There's no reason besides the fact that they've been focusing on anything and everything else. That's what I want to see specifically from Nintendo.
Mario Brain. Work out with Zelda.
Exactly.
I don't know. To me, Nintendo is all about the fun factor in an experience that basically uses more of me than just my hands and my brain, as a usual game would be, right? I don't necessarily see them as all about wellness and health and whatever else they said to explain their pivot last night.
I mean, they had Brain Age, they had Wii Fit. They sort of set a lot of these trends in motion, I guess, and they tested a heartbeat monitor a while back, but they never shipped it as well. So they at least have been on the forefront of the thinking around this, I guess. But it's almost like a backhanded compliment for NeuroGaming, which is, we can't succeed in games, but maybe we'll succeed in NeuroGames, right? So anyway, do we have any questions from the audience at this point? I'm going to keep asking, but if you want to ask a question, raise your hand. Oh, we do have. So back there in the middle, do we have a microphone for the question? So there's the guy right around the middle by the pillar there, but okay, well, first question down here then. We'll get back there later.
Yeah, I was interested in something Tim said just now about what happened with Luminosity, how it changed people's narratives about themselves, because I tried the Muse headset just now, and the two instructions it has is don't be self-critical and watch your breath. And watch your breath, I think, is very familiar, but don't be self-critical and changing people's narratives, I think, is the most fertile part of this. And I think that comes into the NeuroGaming conversation, because there's a lot of focus on, rewarding yourself if you see some sort of little pattern like this. But actually, and my inspiration comes from Kelly McGonigal, who's Jane McGonigal's sister, her TED talk on stress and how you narrativize stress. And in fact, stress isn't bad for you at all. It's how you narrativize it, is this talk. So I think for gaming, this sort of exploration of changing narratives or playing with narratives and brain and how brain and narrative works, that's super cool. And I know that's interesting to me.
It's a good observation. One of my favorite techniques is use a game like Wrapper to make kind of meditation or other things that might not seem as fun or take a lot of time to master, a little bit more digestible for the masses. So one of the great applications would be things like breath training or relaxation master, or all these things which basically teaching you, mindfulness meditation, which to me is the most ancient neuro game of all.
One of the areas I'd like to see more is marriage of neurofeedback and brain training games. We haven't seen a lot of that yet, and I think it's one way of making these games more effective. Luminosity, for example, just uses the brain training approach. Melon Muse and many others have a number of games with the EEG feedback, but really paying attention to the ability to improve peak performance at the same time as using neuroplasticity to improve our performance through brain training, I think is an area which has a lot of promise and needs more attention. And it's an area that can fly under the radar screen of the FDA, and we can talk a lot about wellness and making people feel better about themselves, et cetera, without needing to make a therapeutic claim.
So just as more just a observation as a meditator and a user, and less from a NeuroGaming standpoint. But there's been things that have made meditation easy forever and ever. They just don't get mass popularity. There's things like paraliminals and learning strategies that use sound to get people in meditative states. You don't have to be meditating for 20 years, right? But these things have not taken off, and part of the reason is because there's this perception that so much of this is woo-woo, and oh my God, this guy is speaking in a relaxing voice, this is crazy. It doesn't fit with our understanding of a post-industrial revolution, analytically based society. So I guess a question for all of you guys out there is, there's already these types of things out there. How can you integrate that now using the technology tools that you have to make this more accessible and take some of that perspective of it being woo-woo away?
Similarly, just going a little bit beyond meditation, around mental health and wellness, as we've been talking a little bit about as well. I think a lot of the isolation that people claim to be created by gaming, you're sedated, you're literally there's a lot of negative research about the impact of violence in games. You're being lethargic while you're playing. I think there needs to be a lot more done around the social emotional benefits of around various social skills. Cognitive benefits, motivational benefits that you're getting from playing games as well. More so around mental health and wellness when it comes to issues of folks with PTSD, eating disorders, anxiety, folks that need CBT to get over this stuff. One of the worst things is the feeling of isolationism that you actually have with that, right? That you think you're the only one, that there's a stigma associated with it. More folks in this country than, well, actually I should say in the West, actually have problems around mental health and wellness than one would believe. So I think that the sense of community that's created through a smartphone, through a social game of some kind, can kind of reduce a little bit of that stigma as well. I'm really excited about community building exercises that are done around just that for those types of folks.
And just to add to that, I think that's where the fit of academics could come in, right? So if it's Disney, for example, is no longer, they're still doing educational premium apps, but the way you do it is it's like $1 to get in and then $10 to see how you compare in your city, in your region, in the world to other kids how are they performing, right? So there's all these testing components that are now being added in to games that otherwise they would have a very hard time charging premium for, right? Or if they did free to play, they had way too many chargebacks, right? Now, how can some of that be brought in along with some of the metrics that you guys may already be able to get through NeuroGaming into this world of other types of applications like meditation and whatnot, right? Can there be some kind of paraliminal session that if I do and I can find out, hey, I had better concentration and I was able to have better memory on the top 10 items, what does that look like? How can that be a fun experience? I think that's the important part, because the more you go to this value proposition of actual see sort of medical results, the less exciting it is, and the fun part I think is very important.
We had another question in the middle somewhere. Still got a question?
Hi. My name is Carl
Oh.
Zern. I'm with
Could you
Florida.
stand up? I don't see you. But
Okay.
anyway. Okay, thanks.
My name is Carl Zern. I'm with Florida Research Instruments and Villanova University. I had a question in regard to FDA regulation. At the present time, FDA seems to be backing away from mobile devices, and their advice, their current advice is, well, if you have a weight control problem or something like that, we're not interested in regulating that. But by the same token, when you take a look at these applications which have use EEG, they might go as far as requiring a PMA rather than a 510K, because it's really not there's no equivalent devices on the market. So if they go to a 510K, you're talking about, you know, just even regulation costs, just cost before you even start putting your applications is of like $250,000. So my question after this long statement is, have you VC companies have considered some of these things when you determine, when you're figuring about who to invest in?
I think I would add to that that I had heard that Nintendo shied away from shipping its heartbeat monitor years ago because they didn't want to go through FDA approvals. But anyway.
I mentioned before the company I have that's actually right now evaluating that decision. Do we go down the FDA 510K? And there's a process called a 510K de novo now, which doesn't require to have a predicate product on the market like traditional 510K. And it all depends on the risk classification, whether it's counted as a PMA or 510K. In any event, you're talking millions of dollars, whichever pathway you go, compared to a non-FDA, a sleep aid, quality of life, or whatever you call it, that doesn't make a therapeutic claim. If it makes a diagnostic or therapeutic claim, it requires FDA approval. And the FDA will include a cell phone as a medical device if it's involved as an integral part of a therapy or a diagnostic. And clearly the FDA process can't keep up with the product cycle of phones. It just makes zero sense. So you have to think very carefully about which route you want to go. And right now the FDA hasn't tried to regulate things like feedback and so forth. And it may or may not, depending how close it looks to a therapeutic. I think there's lots of opportunity for wellness without necessarily having to cross the path of the FDA. Don't forget, we're also talking about US only. In Europe, it's very different. I was intrigued to hear about the Spanish company that has stimulation as well as EEG. Good luck with the FDA with that one. Closed loop. That'll be, I think we have a company that did closed loop. It took us $250 million in 12 years to get approval for a closed loop system for epilepsy. In the FDA, it was approved, in Europe, it was approved with what's called a CE mark many years ago. And so that's just the difference between our wonderful FDA system and the CE mark system that's more common in Europe. And it's different in each part of the world. So for European companies, there often is a regulatory pathway that doesn't cost that much money. But in the US, it's a decision you have to make very carefully whether to cross the path of the FDA or not.
I would agree with that. For Mayfield, if entrepreneurs come in and say, oh, we'll need FDA approval to launch, and we usually run screaming from the room. But the best answer is this stuff is good enough to probably pass FDA. However, our path to market will probably be on the other side towards the wellness or augmentative part of that. Therefore, we won't need FDA approval for that. Of course, we can go get that later as market traction picks up, but we don't need it. And it's often positioned as this is improving your life. So even the brain stim stuff, the Halos, the Thinks, the others out there, you know, it's a bit of a wild, wild west of self DIY brain stim out there right now. But if it's more sort of like this will improve your brain, not this will fix issues that you've had post-stroke, et cetera, or diagnose things, then you know, while it is a gray zone, you could probably have a bit more wiggle room to operate.
Nicole?
Let me just make one comment. There is an advantage of FDA approval, and that is barrier to entry. Because many of these companies, you know, we've seen it in the headsets. There was NeuroSky and Motif, and now we have Melon Muse and a ton of others coming along. And not a lot of barrier to entry to a device that doesn't have an FDA approval. If you have an FDA approval, someone else has to get it too. And if you do a double-blind randomized study, you've already set the bar very high. So the better capitalized companies, which traditionally means the bigger companies, create a barrier to entry. So there is some advantage sometimes of going down a PMA or 510K de novo pathway.
Nicole Zara from Yetizen. Just a really quick question. So you guys get approached by a lot of entrepreneurs in this segment for investment. What's the biggest mistake you think people make when they come to you?
What's the biggest mistake an entrepreneur will make?
When pitching?
Yeah, I'm sorry, when pitching.
A couple of them. One is the way they position the business model. For this particular space, most of the interesting companies I see are making revenue from day one. And so if you kind of come in and say, oh, I'll figure out monetization later, I just want to focus on growth, That's not the greatest answer. Similarly, if it's a freemium model, remember, most freemium games really depend on whales. I'm not sure that NeuroGaming and whales necessarily fits together. I think a coaching or, like I said, personalized self-improvement fits subscription a whole lot better. And there's so many companies from Headspace, Focus at Will, Lumosity, Happify, blah, 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 on and on, that are proving world-class conversion rates from free trial to paid subscription in the 3 to 7% range at $5 to $20 per month. Once you offer an annual plan, you can get probably close to 60, 70% of subscribers paying a year up front. That leads to negative working capital cycle. Retention rates, usually exceed a year. That is an awesome set of economics. And so I'd rather see entrepreneurs pitch me that, even if it's only 100 paid users, than to say, I got 5 million installs and I'll go figure out revenue later.
Further to that, it's exactly your attention to the numbers and the data that you're actually showing me. Show me that you actually have your hand firmly in analytics. Show me your cohorts that you've been monitoring to really track your traction and how well that's been growing over time. Not getting sloppy around that is really important, specifically when you're talking to us. And regarding cost of customer acquisition, when you're looking at scaling, further to what Tim was saying, if you just assume that you're going to figure that out, like you're just going to raise a Series A later and pour a ton of money into marketing, okay, that's fine. How are you going to do it? And then you start seeing like doe eyes, deers in the headlight and stuff. So you have to have a strategy around that too. Don't just think it's going to work itself out.
I agree. I think the biggest mistake is assuming that if we build it, they will come. There has to be a good business model, a sustainable one.
And then if it's gesture and movement and content in any way, and you're telling me it's games and it's fun, I better see some really good retention rates on whatever user base you do have.
I was going to ask, in the health and education space here that's related to gaming, it seems like fun has been the missing element for a long time, right? These games just so often aren't fun, and I couldn't really tell if you brought something to me in one of these spaces whether people would play this by the millions or not, right? I mean, that's a very hard call. So how do you guys try to help answer that question? If somebody says, "Oh yeah, it's fun," how do you sort of double check that they're going to be a really fun company?
Well, I kind of already mentioned with the retention, right?
Mm-hmm.
So we
That's
have a
good.
company called Drumleaf that I'm not sure if you would quantify it as NeuroGaming. I will, and then you can argue with me later. So basically, Drumleaf helps you in this virtual world for kids express themselves, figure out how to be more confident, how to create pieces of music, all these amazing experiences online, right? Now, when Drumleaf first came to us, they had a small beta out there for about a year or two, and their initial cohort still had a massive retention percentage, still 2 years later. To me, that means the kid finds it fun, the parent decided to start paying 2 months into it, they think there's value. That's something where fun is already established by that demo.
But that's too easy because that's after the fact, right? What about they're coming to you before they have any of this?
Tell them to go back and get me numbers.
One way I look at it is if you're pitching it as an education game, you're really trying to tell me that your customer's the parent, right? Because they open up their wallet, and they will because it sounds like a good message, but the end user's the kid, and so there's a huge disconnect. The number one metric is you can test this on 10 kids. If the kid is not screaming, nagging, whining, bugging the parent, I want more, I want more, I want more, relentlessly, it will fail. Because the kid, unless they scream for it to the parent to constantly re-up and renew, the parent after a while will be like, my kid doesn't seem to use this, let's churn off. Right? That was the Club Penguin thing. Kids were screaming until the parents like, shut up already. Okay, fine. Here's your subscription.
Just not bragging, but Drumleaf actually has performed better than Club Penguin at the same time frame. So I'm very proud of that. But Dean, to your point, right? I am not the demo that would be playing on Drumleaf, right? So if I go in before they have that kind of data, and say this is fun to me, I may make some really, really bad calls. So I kind of have to wait until there is that kind of market traction. Otherwise, I can't assume this is going to be fun for that end demo. I'm not 8 years old, as much as I'd like to be.
Sunny?
It varies largely by the type of game that you're doing, that you're seeing in NedTech as well, right? Long gone are the days of like Oregon Trail and Carmen Sandiego and all these other like games that you had to play. Like you played them because your teacher made you and you thought it was a great way to like kill some time in class, right? Oh, it's the day that we're playing the game today. Great, that's awesome. I think now when we're starting to see what's out there to compete for a child's mind share. You're talking, yes, great, Angry Birds is, going to be I'll minimize as soon as my mom walks out of the room, and I'll just open up a game I really want to play. I think that too much focus has been on focusing on trying to distribute through teachers specifically. So there's been a lot of analytics around, oh, this is what it's a flipped classroom, it's blended learning. This is what, you can see how your kids have performed in their homework over tonight. That stuff is, yeah, that's great. You might get a teacher to be like, okay, I'll try this out. But it's boring. Like the game is pretty basic. It's I think the companies that we've seen that have actually been impressive in this space have not been actively trying to do a game. There's a great company that's raised a bunch of money named Class Dojo that has been all about putting a bunch of little avatars up, and it's a modern day gold star system. So if you behave, you get to personalize this avatar a little bit more. You're slightly publicly named and shamed in class every day, but that's exactly what teachers had a problem with, which was it's not about getting the kids do they understand what I'm trying to teach them, it's getting them into a position where they're willing to even listen. And that's exactly what this does, is behavior modification, right? Stuff like that has worked terrifically well. When you're trying to get me to compete, you're trying to compete with mindshare against the kind of games that we would see on a for-profit, purely for-profit, mobile-first kind of approach, for example, I've not seen anything come even close. So there's a long ways to go around EdTech specifically.
I think the great thing about this community is bringing together neuroscientists who understand therapies and gamers who understand fun. And we need both in order to get a killer app. We need this breakout technology which people find compelling to use, addictive even, and at the same time it has some efficacy for wellness or health. And I think that's really what we're missing right now, is a really breakout killer app that would take NeuroGaming to the next level. I mentioned earlier, I'm excited about the notion of monitoring emotion, effective computing, because if we can actually monitor whether people are engaged, if they're aroused and have positive valence, that's good. If they're not aroused and have negative valence, that game is not good. So it's pretty easy to measure that sort of thing now using heart rate variability, skin conductance, and different EEG measures. So seeing that interaction of our moods, our emotions with the gaming, I think could potentially offer a new level of interacting with games.
I want to ask you two at the end a little bit more about the frequency of your investments too. Roger, you were saying that in the past year you didn't invest in the neurogaming sector, but you were here last year and at the event, and I'm sure you got like 100 pitches after you went up on stage, right? And then Sunny, you guys have been investing in games a lot more frequency. Can you both talk about, say, the frequency with which you are investing might invest in this space as well?
So we've not made a traditional neurogaming investment in the way that I just described it by corollary. I would say that we did make one investment in a company named MindPirate, which is focused on wearables, and gaming was a vertical within that to demonstrate what was capable with this platform we were building. For those of you that don't know, MindPirate was developing a platform to allow wearables to communicate with one another named Callisto, and they demonstrated that originally by developing games on Google Glass. It was a very steep learning curve for us to go out there. It's such a diversified marketplace right now with the number of sensors that are out there. I think that what we'll see in September at WWDC will really sheds a lot of light on what the sensor environment's going to be doing from design powerhouses that I don't think folks like Nintendo should be competing against anymore. In terms of the types of, the frequency with which we're looking at these kind of companies, huge, because it's impacting everything. So this is not just how how wearables impacting health and fitness or gaming. It's also how are they connected to Internet of Things and to your Nest and everything else that's going to be connected with an actuator and a Wi-Fi chip. So we are seeing companies that are touching upon this space very frequently. In terms of doing an Oculus or a Survios or those kind of companies kind of deals, no, we've yet to make one. So I would say MindPirates come closest, but we do see them very often.
For us, NeuroGaming, neurotechnology has to compete with other deals in our shop, and we made a couple of biotech investments in the last year. Biotech space happened to be hot. There's been a bunch of IPOs recently, and we did some late-stage deals, early-stage valuations. We have to answer to our own investors, the LPs, so we look at things on a sector basis, and as sectors become hot, we move in and make investments in that space. Apart from that, as I mentioned earlier, we have to look for the breakout companies. It's not just about technology. It's about the value proposition, the management team, the market, and above all, as you mentioned, who else comes along with us as part of a syndicate? Where's the financial risk mitigated? So there's a lot of factors, and this is a very young industry. I think there's a lot of promise, but it is early still.
Other audience question?
I had a question about how you determine how much to invest in a seed round for a gaming company specifically, and maybe some exact examples of companies you guys have invested in, how much.
How much to invest in a seed round in a game company?
Okay, so yeah, I guess we're doing a lot of those. So I can't give you specific examples in terms of names of companies and stuff, because a lot of times, the financing happens a lot sooner before the press announcement is made, and we're a relatively young fund, so I can't violate specific names. But to give you some indication, the annoying answer and the true one is it depends. So like, how far along is the company, even at the seed, right? The stages and the terminology that you're using, when companies like Klinkle are going out and raising a $21 million seed round, the terminology becomes kind of meaningless. So I think if you're a first-time, so let's say you're a first-time entrepreneur, you've got a killer tech team, great CEO, good eye for product and design, and you've got a good BD guy that can help you, scale at the early stretches as well. So you're making a pure content play, I'm assuming. You're not going after, an analytics play, a monetization play, a UA play, or something like that. You're literally going towards making a game. You have various options besides that, which you should also consider, first of all, I must say. Like, you've got your consumer-driven crowdfunding marketplaces like your Indiegogos and your Kickstarters. You've got a lot of angels out there that will probably, be very passionate gamers who will cut you a check as well. In terms of numbers, I would say, typical seed rounds that we've been doing, our typical check size is between 500K and just over 2.5 million. In terms of valuation, that's usually set by the offer that either we'll make as a potential lead, or we'll follow in on the back of a syndicate who's, or another lead who's already set market terms. Because a company's worth what someone's willing to pay for it. There is no exact science around this, right? But
You guys
raising,
recommend Kickstarters in this space?
yeah, for sure. In terms of showing, that you have some initial demand, built-in demand for your product, I think branded game designers out there, folks like American McGee, who developed a game named Alice, and he runs a Chinese company named Spicy Horse now. This company has done phenomenal success on Kickstarter based off the back of his brand, the art that he's known for, and the content he's made in the past. It works really, really well for devices, like cool devices that you can show to your friends that are easy to relate to. In terms of a game, if you can build like a basic level playable demo or something like that by the time you're coming to show it to me, that will obviously really help. But let's be honest, I'm backing you off the back of your team and the strength of your team at this point. So a typical seed round, as a rule of thumb, I'm not dodging your question, is a typical seed dilution is around 20% for the entire round. So you take your amount that you're raising and you multiply it by 4, right, to get your pre-money valuation. And then that's generally what you should think about in the realm of what's loosely reasonable, I guess. But there's no exact science.
So I think you should be asking a different question. I think the question you should be asking is, based on where I want to go, 12, 18 months out as a company, what do I need to look like then? And based on the team I have right now, how much money do I need to get there? If you can give a sort of strong explanation for this is where I am, this is what I've achieved so far, this is where we're going, and this is how much money we're going to need to get there, that's really the first step. So not what's the going market rate right now. I know it's exciting to start with that first, but I would actually start with what do you need to get where you want to go, and what's that vision of where you want to be.
And I have some good news. Lumosity and at least half a dozen other examples I can think of were able to launch and prove subscriber monetization in less than $1 million in their seed. In fact, a lot of them can do it on $500,000. So that's the good news. A lot of these aren't based on a lot of art assets and production budgets and all that kind of stuff.
And then one other note about Kickstarter, the American McGee types of brands of game designers out there are few and far in between. So, and that, I don't know, I calculated this once upon a time. For a lot of these guys, it was 15 to 20 years to get to that point in terms of a consumer-facing game design brand, or the game is that well known. So unless you've already done that, that may not be the best way if the only thing you're putting out there on Kickstarter is the game, right? It's a little different with devices because there's more about the value prop of the devices. There's this feeling that, oh, I would want that because, hey, maybe it helps me achieve my meditation or my running goals better, or whatever it may be, right? With games, it's a Kickstarter category. I think of all the Kickstarter campaigns out there, 50% of them get funded. When you go to games, only 20% of them do. Most of those 20% are the ones that have a large game designer or a game that's consumer-facing already as a brand.
So let's do more questions, but maybe get, say, one answer from the panel so we can get through whatever questions are left. There's one over here. On the left.
You mentioned you were running an accelerator. I'm at an accelerator right now. Our demo day is coming up. So I was wondering, what should a startup do to make that transition after demo day?
After demo day? Which accelerator are you in?
We're at the Leap Accelerator, a couple blocks from here.
Okay. So we actually don't have a demo day. And we have a reason for that. We think there's, demo day leads to a lot of great press attention. There's this feeling of being on a platform and sort of letting a lot of people know, hey, this is what we're doing. There's a lot of excitement, but it doesn't necessarily help sort of conversations with the next stage of partners. So I wouldn't know how to answer that question, mainly because I decided never to have a demo day for my startups.
What do they do right after they graduate then, I guess?
So we actually do facilitate like one-on-one meetings with various investors, have more in-person like partner meetings. It's not like in a big crowd. It's usually just an investor in the entire class. And then from there, there's usually the next few steps of, where are you going from here? What other partnerships do you need? Are there more investor connections you need? What's the feedback of investors? Do you need to go back and work on more traction? Many of them, by the time that they come to the end of the program, have already raised early on.
Another quick question. I had one about platforms and whether you would sort of recommend startups go toward a certain direction for a platform. Like Oculus seems like it's a lot more stable and it has a secure future now that Facebook owns it. But mobile, if you go into mobile gaming now, you're one in a million companies on the App Store. So what is some advice for this category, NeuroGaming, when it comes to deciding to support a platform? And also some people may feel like Oculus isn't good enough as a platform and they're waiting for sort of like a better platform to come along or maybe invent a new platform. What are some feelings about that too?
Should I take it? Okay. So I actually am of the opinion that on mobile there's still green pastures, right? There's certain categories out there that users actually want a different type of gameplay experience in. It's not going to be what you're reading about in the press. So if you say right now you want to do a casual gaming company or a mid-core company or whatever else, those are already things that lots of other companies are playing in, and it may not be a startup opportunity for you sort of going in, right now if you're just starting. But there are some other things. So a non-NeuroGaming example is we have a company called Incuvo that's created a game called Criteria, which essentially is the ability to create games using a drag-and-drop interface for anyone who's not a game developer, right? People take pictures with their phone, they play games on their phone, they want to be able to create games and share with the world, that UGC component. That was a category we didn't feel anyone was tapping into on mobile. It had been done before on other platforms. That was a good startup category to me. So that's a green pasture opportunity, I feel, right now in terms of mobile games, and this company is furthest along enough to be able to take advantage of that, right? In terms of whether you should wait for another platform that's coming up. Listen, it's always about, as a startup, you're always going to be early adopters and decide if you can be the winner and the last sort of winner standing as the space grows and gets bigger. So is Oculus that for you, or is it something else? That's something that you should be making a guesstimate on based on the core competencies your team may already have. Do you feel your team has what it takes to make a unique, amazing experience in Oculus that no one else can? And no one else can duplicate, right? So the company that we have out in Colombia that's basically making Oculus experiences and taking it to a mall, that's a cool, awesome way to make a lot of money and keep doing R&D on those types of games, right? So they, with one mall, and I think it's 3 or 4 or 5 rides from every single person that comes to them, using that device, they're able to generate enough to keep doing R&D, and they've been able to fund the next 2-3 game experiences from that. Right? So if there are ways to do things like that, why not try it? Why not experiment and be one of the last few companies standing and doing well and having a company of consequence? Because by the time it gets big enough as a market and everyone else starts going in, you just have that much experience and data points of what works and what doesn't.
Sonny, you got something you want to say? Or, yeah.
Oh, I was just going to say, as a fan, as a gamer myself, I think that I personally, I'm not speaking for anybody else, I'm not speaking on behalf of the fund or anything, but I was personally fairly disappointed with all iterations of the Kinect to date, for example, with the one console. As a big Star Wars fan, for example, there was a great Star Wars game that was supposed to launch with the original Kinect, with the which was maybe 3 or 4 years ago or something. Just that idea of being able to be truly immersed in the entertainment that that resonated so strongly with me. It was completely lacking. Is that going to mean that Oculus or Morpheus is going to be the platform which changes that and really does lead to that truly immersive, interactive entertainment? Great, I want to be backing companies like that. Have I seen anything like that that's pitched to us yet? No.
So it looked like we had a last question out here. We're out of time, but go ahead and ask a quick one if you can.
Thank you. Had a question about demographics. Actually, as obviously games is an interesting animal to the extent that caters to everything from very young kids. I design for a toy and games company myself, but I'm also designing for adult games. And so I'm curious, is there a bias? Do you see a sort of bias on the funding side of things between the kind of companies, especially as we move from gaming to neurogaming and all of that that entails in terms of wellness, and as that applies to adults or kids, do you see is there a bias in the kind of companies that are attractive to you in the investment community in terms of whether the younger end of the demographic, companies that are in that space are more attractive, or whether the companies that cater to adult games are the kind of companies that you believe have staying power and are more fund-worthy?
So wait, the question was kids or adults for games? Yeah.
Demographic question. I'm just wondering if there is a bias. Do you think within the investment community towards, or does it really not matter at all?
In the health and wellness space, I think there is a bias, and that's towards the aging baby boomers. The demographic, which is a bulge, speaking as a member of the Old Farts Club, I'm very pleased about that, that we're willing to spend money on stuff that makes us feel good, look good, and now makes our brains better. So there is this whole area, I think, that's the notion of the brain gym, and people focus on their body fitness. Now we're starting to see more focus on the brain fitness. So I think that we'll see more, because that demographic bulge is going through. It represents a marketplace where people have disposable income. And as we start to see more focus on that mental wellness as well as bodily wellness, we'll see that bulge taking up some of these products. On the other hand, if you're talking about education, that's mostly, of course, about children. And we haven't said much about the education market, but I think there's a lot of opportunity there, both with brain games and marrying neurofeedback and brain games.
I like the adult target. Really, your target audience is anybody who'd buy a self-help book in that giant section in the former Barnes & Nobles and Borders of before. That's everybody,
You said that you're making toys. You're a toy company?
That's one of my lives, yes.
Okay, so I think that shifting in the real world, especially with games focused towards kids, I think it's a while away, but I think that a lot of the opportunities that are presented by 3D printing are pretty exciting. There's no reason that Skylanders, or Infinity, or any of those companies, obviously they've got great IP. That's awesome. You can license that design, through a CAD and CAM structure and share it out. I think the infrastructure of getting a 3D printer, that's regulated and safe for children with disposable parts that you can't break off and eat and swallow and stuff is a long way away. But it's incredibly exciting. I think that kind of opportunity with what you're focusing on, a truly, a great, diverse virtual world linked into instant gratification to be able to print the collectibles that you're playing with the avatar and screen. There's besides a retail advantage that these guys currently have with distribution, there's no reason that won't be disrupted in the perhaps intermediate term somewhat, I would say, is particularly relevant for you.
Thank you.
I think it depends, right? So if when looking at kids, I think the first question a lot of investors are asking is, okay, but depending on the age of the kid, the person who's making the money decision is the parents. How are you convincing the parents? If you can answer that question, you may have got it made. If you're looking at adults, right, what is a way that you can basically get adults to keep paying not the freemium model, subscription, or something else, how is that going to be a big market? Because there's so many other things that adults are also looking at that are competing for their time. So whichever question you can answer, that should really sort of be what dictates whether or not you pivot your company towards the demo of kids or adults, which I think is really what you're asking underneath all that question.
And thank you. We are out of time. And actually, if panelists sort of go to the back of the room so we don't hold up anything else here on stage in case you guys get rushed or mobbed, be rushed and mobbed in the back of the room.